Hello there everyone, my name is Pasqualo and welcome back to my YouTube channel. Guys and girls, in today's video we're gonna discuss some more painful information, but that's what the market is, and I'm giving you everything straight from the market and from the macro, from technicals. So it is as it is. So brace for some really cool stuff, really awesome stuff, very important stuff, but it's a bit of a painful stuff. I've prepared quite a few things that you really have to stay aware of if you want to be succeeding in the crypto markets and so that you understand what's coming. So if all of that sounds great, and we're going to talk about macro, on-chain, and then we're going to come back to the technicals and discuss some very important technicals as well. And before we do, please go down into the description of this video or into the pinned comment and use the link to my free Discord channel that you can join, where we post all of our trades, all of our analysis, precise entries, exits, controls of the trades, explanations, fundamentals, technicals, all of it for all of our scalp trades, because quite frankly, the market is mega slow right now. So the only things that we can actually do is go to smaller time frames and take smaller trades. So, and all of those are going to be, again, those are hyperactive trades. So all of those are going to be in the Discord channel, and we've prepared some really awesome trades for this week. So go and join us like right now, unless you don't want to be making money. So if you don't want to make any money, it's okay, don't join it. So, and without any further ado, guys and girls, hit that subscribe button, hit that notification bell so you're always notified when I make a new upload. And also, as a small token of appreciation, you know what to do. Go down below, like the video. As soon as you see my videos, call me Mr. Spot On down in the comments. As soon as you turn the video on and like the video, because every single video is full of insane content. So let's just get straight into it. And as always, let's get through all the most important stuff before we talk about the technicals. And this, guys and girls, is going to give us the understanding of what it actually all looks like as of right now. This is the map of the drawdowns and the size and duration of Bitcoin, Ethereum, and the S&P 500 in comparison to previous crashes, to previous recessions. So it gives us a good understanding of where we are at right now. So blue is S&P 500, the stock market. Orange is currently the Bitcoin, and the pink is Ethereum. So this tells us that we are quite in a big pain area right now when it comes to Ethereum and Bitcoin. So we are quite low as in regards to other instances. However, guys and girls, what's important to understand, and this is going to come in very handy once I give you all the rest of the information in this video, most important here is S&P 500, because we know that Bitcoin and Ethereum follow S&P 500 very much, unfortunately, at this point, and decoupling maybe will happen in the future, but for now it's following it to the T, so to speak. Right now, S&P 500 is literally it's not so bad if you compare it to COVID crash or Black Monday or Nixon recession, crash of 1973, dot-com bubble, Great Recession, or Great Depression. So hopefully we're never going to get there, but it just shows us that we are doing quite okay so far. It means that there is so much more room to go down, and now let's talk about the other stuff and see why we could actually go much lower. This, we're not going to spend too much time on this because I showed you this before, that the 2S and 10S yield curve inversion that we are currently seeing right here, the inversion is insane, and this is the biggest inversion for a very long time. This has now exceeded the inversion that we experienced between the dot-com bubble and the global financial crisis, and the yield curve inversion has predicted every single recession over the past 40 years, 40. So we are in a bad situation. Now, the next thing that we have to understand is the rate of change. And guys, before we talk about this, remember, if you want to be trading yourself actively, then there are links down in the description as well as in the pinned comment to numerous exchanges that I personally recommend, that I've personally tested, and there are insane bonuses, up to $8,000 with BitGet, up to $4,000 with Bybit, up to $10,000 with OKX, and up to $600 in deposit bonuses with Binance. And BitGet gives you these bonuses on top. Pause the video, check it out, go use my links down below and join these insane, amazing exchanges. So now the rate of change, what is this whole thing? Now, what matters the most as of right now for us is to understand what is the Fed doing and whether there is a big problem with a lag to the data that we are seeing right now. And here you're going to see that the rate at which this change is happening in terms of the interest rate hikes, so how they're actually hiking the interest rates, the rate at which this is happening is the big deal. So going back all the way to 1960s, the current rate hike cycle is happening at the fastest pace we have ever seen. So why is this a problem? This is a problem because when the rate hikes are so fast, the data can be lagging and the Fed can break something much faster than they will realize, which is increasing substantially the risk of sending the economy into a terrible recession. So this is just simple, pure market physics, just how it works. And we've already seen before that the fact of us realizing that we are in a deep recession with terrible unemployment numbers, this is a good reason for the Fed to pivot. But this is still not the bottom of the market. The bottom of the market in most recessions happens only when the interest rates come back down to zero, or actually come back down in general. So that means that we potentially have a lot more way to go down. Now, this is how fast is the Fed hiking the interest rates, and the red line right here is 2022. So we're seeing the increase in interest rates is just ridiculously fast. So, and there ought to break something. This is the danger. And here is again the reason for the inflation. There is a comparison between, how much money Fed was printing and putting into the market and buying up stuff. So in 2020, after the COVID crash to stimulate the economy, here is the increase. While in 2008 it was more gradual. So it means that everything is much more overheated than in 2008 in the recession that followed 2008, which is a really bad sign, which you have to pay attention to. And of course, the mortgage rates are accelerating like crazy, which is this red line right here as well. It's not as bad as it was in 1980s and 81, but nonetheless, it's very fast. So the only thing that currently is looking okay is the unemployment rate. So here is the unemployment rate, and usually in other recessions, we could say that, yeah, we're in a recession because people are losing jobs. So as of right now, the unemployment rate is actually looking very, very good. However, the problem with this is that it doesn't mean the damage has not already been done. The data might be just lagging because they're doing things so fast. And once this becomes, and when the unemployment rate starts to spike, it will be too late to worry about it. And I agree with econometrics here on this topic, because this is what we could see happen, and then we're gonna see more cascading liquidations. Now, the next thing is also very important, and this is we're getting to the price of Bitcoin like right now and what's happening right now. So some on-chain metrics. And here we're going to see that the short pressure is ramping up. And this could be just a bet on the upcoming liquidity crisis, which I'm going to show in just a second. Again, this whole wedge breaking downwards, or some price suppression attempt. Now here we're going to see that hedge funds are actually piling up on the shorts, which means they're expecting the market to dip at some point in the coming months. And here again, you can pause the video and take a look at this chart, and it's actually showing it. It showed us some relief in this instance, but now everything is going back to what it was again. So this means that the bigger boys are betting on the fact that we're going to play around here, maybe do whatever, go in fucking circles, but that in general, we're going to see more downside from here. And we have this volatility that is shrinking right now, which makes this whole trading right here very difficult and very boring. That's why the volume is going down. But usually when this happens, again, the same thing we can see in BBWP, whenever this happens, we often see a huge volatility follow it in a major breakout, either break down or break up. So therefore, all of these trades that gonna pose some kind of an opportunity, I'm gonna update you here on this YouTube channel. So subscribe, hit that notification bell, and also join my free Discord channel. Once again, all the trades, the smallest trades are gonna be there as well. The ones that I cannot manage to mention here on my YouTube channel, there's just too much lag. So as of right now, nothing is looking great. And as I told you before, a lot of resistance is coming in this area. We could certainly see some kind of a pump or a small relief rally for the happy people to liquidate some hamster, so to speak, but I'm still a lot more bearish, understanding that potentially in this map In terms of S&P 500, we're gonna move much lower. And yeah, this is the current situation, guys and girls. Let me know in the comments, what do you think? It's sad, I know, but well, what can I do about it? There's nothing I can do about it. I'm just giving you the reality. And here is going to be also a course that I've done on crypto for absolute beginners. Check it out. Join my free Discord and use all the links down below. A bunch of really cool links. And I'll see you in the next video. Stay smart, stay rich. Peace out.